Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oracle.
And as always, if you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us out.
It really does. So Oracle, I think a lot of people still have this image of them as, the database company from the 90s.
Oh, yeah. Kind of boring legacy tech. The stuff that just runs in the background.
Exactly. But if you look at what's been happening, especially over the last, say, 12 months, that picture is completely wrong. This is looking more and more like an essential infrastructure play for the entire AI boom.
Okay, that's a huge claim. I mean, usually when these old tech giants try to pivot, it's a slow, painful process.
Right. It's messy. But this is different. To really get it, you have to start with just one number from their Q2 fiscal 2026 report. And honestly, when I first saw it, I thought it had to be a typo.
Okay, hit me. What's the number?
It's their remaining performance obligations, the RPO.
Right, so that's the backlog. Deals that are signed, but the revenue hasn't been recognized yet. Future sales, basically.
Exactly. And for a company of this size, you'd be happy with what? 20% growth in your backlog? That would be a great quarter.
Sure, a banner year even.
Well, Oracle's RPO surged to $523 billion.
I'm sorry, hold on, say that again. 500
$23 billion.
B.
With a B, that is a 438% increase year over year.
438% for Oracle? That just sounds impossible. That's not a legacy tech number.
That's the aha moment. That's the whole story right there. I mean, think about it. That backlog is about 8 times their entire annual revenue guidance for this year. They have basically pre-sold their growth for years.
That's just staggering. So where's this all coming from? You don't get $500 billion in new contracts by just selling more database licenses?
You don't. It's coming from their cloud infrastructure unit, OCI. They've shifted from being a software company to being essentially the company that builds the grid for AI.
Okay, so that's the future. What about the now? Is that growth actually showing up in the cash register today, or is it all just promises?
It is absolutely hitting the register. The top line number, total revenue, was $16.1 billion for the quarter. That's up 14%. Solid, but not crazy.
14% is fine, but it doesn't scream 400% backlog growth.
Right, but you have to peel it back. Inside that, cloud revenue was up 34% to $8 billion.
So half the company is now a cloud company.
Correct. And then you go one level deeper to OCI, the part that competes directly with AWS and Azure. That segment is exploding. It's up between 66 and 68% year over year.
Whoa, okay, pause there. 66%. At that scale, I mean, AWS and Azure are not growing anywhere near that fast anymore. How is Oracle pulling this off?
They changed the rules of the game. They realized they couldn't just fight Amazon head on, so they adopted this, you could call it a multi-cloud strategy.
A Switzerland strategy, I've heard it called.
That's a perfect way to put it. They're neutral. Instead of building a walled garden, they made it so Oracle databases can run seamlessly inside an Azure or AWS data center.
Ah, so they're not forcing customers to choose. They're saying, use our stuff on their clouds.
Precisely. And it's working. Their multi-cloud database business grew 817%. It's insane.
Okay, that makes sense. But the other driver for that huge backlog has to be just raw AI demand, right?
Oh, absolutely. And if you look at the client list using OCI for AI, it's a who's who.
Yeah, I saw the notes. We're talking OpenAI.
OpenAI, NVIDIA, Meta, xAI, even AMD. And these aren't small test projects. The OpenAI deal is a massive 5-year partnership. They're all just starving for GPU capacity.
And Oracle can provide it faster or cheaper.
Both, in some cases. Their Gen 2 cloud was built from the ground up for this kind of work, so they're a bit more nimble than the giants who have more legacy architecture to deal with.
Okay. I get the growth story. But let's play devil's advocate. I was looking at the earnings per share number. Non-GAAP EPS was $2.26, up 54%. Looks great.
Beat estimates, yeah.
But I saw a footnote in there. Something about a huge one-time gain from Ampere.
You caught it. Yeah, that's the big caveat on that number.
It was a $2.7 billion gain from selling a stake they had. So if you strip that out, was the quarter actually as good as it looked? It feels a little like selling the furniture to pay the rent.
It's a fair point, and it definitely inflated that headline number. But if you dig into the operational metrics, the underlying business is still very healthy. Even their GAAP EPS was up 91%. So the margin expansion is real.
So the core business is still firing on all cylinders.
Very much so. But, and this is the big but, we have to talk about what all this growth is costing them.
This is where my jaw dropped. We've talked about the $500 billion coming in. We need to talk about the money going out.
You can't build the AI grid for free.
No, you can't. And the CapEx projection for fiscal 2026 is $50 billion. 50.
It is a staggering amount of money. They're building like crazy. 147 live regions now, with 64 more planned. They're adding almost 400 megawatts of capacity.
And that $50 billion is, well, it's more than they're making right now, isn't it? It pushes them into negative free cash flow.
It does, temporarily. That
Yeah.
is the core of the bear case against the stock. They are burning cash to build this out.
So where do they get the money?
They're going to raise it. The plan is to raise somewhere between 45 and 50 billion in 2026 through debt and maybe some equity.
Okay, see, that makes me nervous. Taking on that much debt right now is a huge bet. They are betting the farm that this AI demand is not a bubble.
It is a massive bet. That's the risk. But you have to weigh that risk against the fact that they have the contracts in hand. Remember that $523 billion backlog.
Right.
They aren't building these data centers hoping customers will show up. They are building them to fulfill the contracts they've already signed with companies like OpenAI.
So it's more like bridge financing. They're borrowing to build a house they've already sold.
That's the bull case perspective, exactly. But you're right to be nervous. The market is too. The stock has pulled back, 16% in the last month? People see that $50 billion price tag and they get cold feet.
It's a real gut check. Do you trust the contracts or do you fear the debt? So let's look ahead. If they pull this off, what does this company look like in, say, 2030?
Well, management's long-term targets are incredibly ambitious. For 2026, they're guiding to about $67 billion in total revenue. But their 2030 target just for the OCI infrastructure part is $144 billion.
$144 billion. Just for infrastructure. That's almost triple the size of the entire company today.
It is. And there are some more speculative things out there that could make even that number seem conservative, like Project Stargate.
I've seen that name popping up. That's the rumored supercomputer project with OpenAI, right?
That's the one. The rumors are it's a $100 billion project over its lifetime to build the next generation of AI. And Oracle is supposedly the infrastructure partner.
Wow. And then there was also some talk about TikTok.
Yeah, another what if. If TikTok has to do a U.S. spinoff for national security reasons, Oracle is a logical choice to host all that U.S. data on U.S. soil. They could become the national security cloud.
Okay, those are big, far-off catalysts. Let's bring it back to right now. Q3 earnings are coming up in mid-March. What should people be watching for?
Forget the headline revenue number. The only thing that matters right now is OCI growth.
Does it stay above 50%?
That's the number. If it stays in that 50-60% range, the story is intact. If it slows down to, say, 30%, then that $50 billion spending plan starts to look a lot more dangerous.
And I did notice, for the income investors out there, they did throw a bone.
They did. A 25% dividend hike to 50 cents a quarter.
Which is kind of a bold move when you're burning cash on CapEx. It's almost cocky.
It's a flex. It's the board signaling that they are extremely confident that this cash flow deficit is very, very temporary.
Okay, let's wrap this all up. We have an unbelievable backlog, a brilliant Switzerland strategy, but also a terrifying spending plan and a huge new pile of debt. How do you score it?
Taking it all into account, the risk and the reward, I'm giving Oracle a bullish score of 9 out of 10.
A 9.
Yeah.
Really? Even with the $50 billion hole in their cash flow?
Yes. Because the thesis is so simple, this is a pure picks and shovels play for the AI gold rush. The backlog proves the demand is not hypothetical. And that $50 billion spend, while scary, is just the cost of fulfilling the orders they already have.
So you see it as a necessary investment, not a speculative one?
100%. They are building the pipes for the entire AI economy. And their neutrality means they win no matter which AI model or chip company comes out on top.
So this is not a short-term trade. This is something you have to be willing to hold for a while.
Oh, absolutely. This is a multi-year story. You have to look toward 2027, toward 2030. You have to be willing to stomach the headlines about debt and spending to get to the cash flow harvest on the other side.
Patience is the price of admission. You're buying the construction company, but the building isn't finished yet.
And with the stock down 16%, you might be getting a pretty good price on that admission ticket.
It's a fascinating story. A total transformation from a legacy software company to an industrial-scale infrastructure giant.
It really is. The numbers are just, they're so big, both the good ones and the scary ones, but the direction seems pretty clear.
Well, this has been great. We're definitely going to have to check back in on this one in a few quarters.
I'll be watching that OCI growth number like a hawk.
And for everyone listening, just think about that backlog number one more time. $523 billion. That's it for today's talk. We'll catch you on the next one.